Hello everyone, welcome in to my YouTube channel. Welcome to Accounting with Oscar. I'm so glad I can finally say this after the longest time ever. Yeah, those of you who've been following me or following my classes from the very beginning, you know I would have wanted to do this since 5 years ago, but yeah, life happened, gotten a bit busy, but we're finally here. We persisted on for 5 years, so yes, it's a little happy dance for me. Finally started this YouTube channel here. Yes, welcome in. So I hope y'all are going to get some insightful information out of all this. Feel free to make yourselves at home. Feel free to interact among one another. Feel free to interact with me, right? So in this channel, what's going to happen is that I'll be posting video discussions, right? Probably some attempts at questions, probably talking about some theory that we're gonna, we're gonna get more of that later. So I'll mainly be focusing on the accounting papers, yes, accounting and business studies for IGCSE, and I'll also be giving you some updates on the ACCA FIA Foundations in Accountancy paper. So look out for that whenever it's gonna come, because I don't really know. I've not had everything planned out yet, but we're gonna make this, right? We're gonna make this happen. So yeah, welcome in. Feel free to voice out anything, comment anything, or give me some feedback on what you want to see, what type of content you want, or how we can make this a better interaction. Right, so today, let me begin my discussion. Gonna be something very simple today. So I'll be analyzing one of the latest IGCSE past year papers, which is the Accounting Paper 2, and this is the February-March 2025 sitting. Yes, it's fresh out of the oven. Just happened about 2 months ago. Now, I don't believe anyone has discussed this paper on YouTube, but I'm gonna try, right? We're gonna try and analyze through this paper and attempt the questions along the way. So feel free to download this set of questions in the link provided below. Yes, I can finally say that as well. So feel free, download this paper in the link provided below, and yeah, why not try to attempt the questions together with me, right? So let's get started. I know you're waiting for this, so I'm gonna go through the first question. So just a bit of an insight into this paper. Now, most students who I've interacted with, they mention that the paper looks doable, right? And I emphasize on the word looks. Yes, it seems like a very easy paper because what we're doing here is some ledgers, right? We're gonna go through some ledgers, gonna go through some financial statements, some correction of errors, some ratios, as well as a question on club and societies. Now, definitely the questions are straightforward, but there are certain traps, right? Or certain hiccups you're gonna face along the way. So I'm gonna be here to bring you through all that. Alright, so let's get started with the first question. RIA started trading on 1st August 2024. The balances in RIA's purchases ledger at 1st of January 2025 were as follows. So we're looking into the purchases ledger specifically. So this is where we're going to be talking about the trade payables. So we have Darina with $465, Jadu with $170, Odie with $275, and Nakir with $600. I'm not gonna be biased, but I like the name Odie. Hey, another old fella, right? Where are all the old fellas at? Yeah, we are all the odd ones out. Well, anyways, we have a piece of information here. So Odie allows RIA trade discount of 5%. So this only applies to Odie, right? No one else. See, another benefit of being an O. Yeah, well, technically it benefit from knowing a person who starts with O. You get trade discounts, right? Wonderful. Okay, I'm not going to go off topic too much. So, the following transactions took place in January 2025. There are quite a lot of transactions here. So, on the 2nd of January, we paid Darina 300 by bank transfer. On the 8th, we sold goods, yes, for $520 cash. On the 13th, we purchased goods with a list price of $180 on credit from Odie. 17, we paid Nakir the amount due on 1st January 2025 after deducting a 3% cash discount. On the 18th, we purchased more goods, 528 from Nakir. On the 20th, again, we purchased some more goods, $73, which we paid for immediately by a bank transfer. So we're going to recognize this as our cash purchases, right? So it's not on credit. There's no buy now, pay later. What we do is we buy now and we pay now. All right, on the 23rd, purchase more goods, $310 on credit from Darina. All right, on the 29th, sold goods for cash of $640, and finally on 30th January, we returned goods of $24 to Darina. Right, so that's all the transactions that we have. So the first requirement here, part A, is a very simple requirement in fact. So you should be able to score full marks on this. They want us to prepare the purchases journal for the month of January 2025. So total the journal and indicate the ledger account where the total would be posted. So this is a fairly easy question here. So in order to get your full marks, you have to understand what is the purpose of the purchases journal and what are the information you're going to see in here. So the purchases journal is simply a list, right? And this is a list of credit purchases. So we're going to input all the credit purchases for January into this segment, right? We're not going to put in the cash purchases because the purchases journal is specifically for credit purchases, right? That is the highlights here. So I'm going to start with the first transaction, right? Where's my first credit purchase? There on the 13th, right? Purchase goods from Odie. So what I'm going to do here is I'm going to park the date in. This is 2025. We're going to have January 13. So I bought goods from Odie for $180, right? But here's the catch. This is the list price. So the list price here is before any discounts have been accounted for. So I have to deduct a 5% because Mr. Odie here is very generous. He's giving us a 5% trade discount. So what is that 5% gonna be, right? Let's get my calculator here. Yes, where's my calculator? Not this one, I have the scientific one as well. Yes, where's my calculator? Ah, there we go. Okay, so yeah, I'm sure most of you are on a scientific calculator, right? I doubt you'd know how to use a traditional calculator, right? Just saying, don't bash me. I know some of you know how to use a traditional calculator, but I think for most of you, you prefer using a scientific one. So yeah, we can't just minus 5% like that, right? So I have to minus, let's put this in a bracket. Okay. No, still not getting the right figure. You know what? Let's multiply by 95%. I'm sorry, I'm really not a scientific calculator kind of person because I find my fingers are always bigger than the buttons and, well, I have bad eyesight, so anyhow, right, I'm sure most of you are an expert at this, so I'm not too worried, right? So 180 less 5%, you get $171 after deducting the trade discount. And that is the figure we're going to park in for Mr. Odie here. Or Miss, right? Not going to judge. So that's our first transaction. Now, the next credit purchase is on the 18, right? Purchasing $528 from Nakir. So 18, Nakir, 528. That's it. You don't have to do anything else because there's no trade discount offered by Nakir. The next transaction, right, is on the 23rd. We don't park the transaction on the 20th because this is cash purchases, so it's not on credit. We don't owe them money. So 23rd, 310 from Darina. So 23rd, Darina, 310. No trade discounts. Right, do we have anything else? Any more credit purchases? No, right? That's the only 3 we have. That's why the question is worth 3 marks. So you get a mark for every question you answer correctly. So let's total all this up. You have 171, 528, and 310. So you come to a total of $1,009. That is the total of the journal. So where are we going to post this over to? So on the 31st, the end of the month, we're going to be transferring this, right? Transfer to the purchases account. All right, going to transfer the 1,009 over to purchases. So it's a fairly straightforward and simple task. I believe everyone should be all right. So again, if you have any questions, feel free to leave a comment down below and I'll come and help you, right? Help is on the way. Now, we're going to move on to part B of the question, another easy area here. So they want you to prepare the purchases return journal for January 2025. So same thing, we're going to total the journal and indicate the ledger account where the total is going to be posted. So I'm going to look for purchases return in my transactions. Where's our purchases return? Do you see it? Yeah, I feel like I'm Dora the Explorer now. Do you see the purchases return? Yes, right? So it's on the 30th. You return goods to Darina, $24. Any adjustments? No, because she does not give us trade discounts. So on the 30th, and this is for $24. So I'm going to put the year 2025. January 30th, this is a return to Darina for $24, right? That is our only transaction. So there are no other purchases returned. We're going to sum this up. $24, and this is going to be transferred on the 31st. So we're going to transfer to purchases returns account. So for those of you who might not know this, your purchases return is also known as your return outwards because the goods are going out of your shop back to the supplier. Alright, so that's a fairly simple 2 mark to score. By now we should have 5 marks, very secure. Right, so we're going to move on to the next question here. Now, this question might seem a bit odd to some of my students because, well, let's read through. Ria's total purchases from 1st August 2024 to 31st December 2024 were 6,327. So what they required us to do is to prepare Ria's purchases account for the month of January 2025. And here's the odd, okay, here's the catch. They want you to balance the account and bring down the balance on 1st of February 2025, right? Now, I'm sure some of you would be scratching your heads right now. You'd probably be asking me, Oscar, isn't this the purchases account? Isn't it supposed to be written off to the income statement? Well, technically you're not wrong, right? Technically, for all our income and expenses account, we do write off to the income statement. So then you'd ask me, right? Why do we have to bring down the balance, right? Well, what's happening here? Is this an asset? Is it a liability? Well, let me tell you, right? Why are we bringing down the balance to the next month? Usually when I do a transfer to the income statement, it's going to be for the entire year, right? So I probably be working all the way to 31st of July 2025, right? For an entire year. Now, what we're doing here is for a single month. So it's for the month of 2020, January 2025. That's why we have to bring down a continuous balance until we've reached the end of the year. Then we'll do a write-off to the income statement. But for now, we're going to be continuing the purchases account from the previous months. Do you get what I mean? So we're going to accumulate the figure until we are at the end of the year on 31st July 2025. Then we'll be posting this over to the income statement. So for those of you who sat for this paper and you didn't understand the concept of this, you would have lost, well, you wouldn't lose a lot of marks. Technically, you'd probably lose about 2 marks for the balances, and that's probably it. So let's have a look. Opening balance 6,327 has been given to us. So this is still the purchases account. I recognize purchases as a form of expense. Hence, it's on the debit side of the purchases account. The next part is to post all the information that I have into the purchases account. So starting with, what do we start with? Okay, do we start with total purchases? Yeah, why not, right? We can start with total purchases, which we did prepare in part A above. So the total purchases, it's $1,009, right? So I'm gonna park this piece of information here. This is my purchases from the purchases journal, right? $1,009. Now, what's the next piece of information we're gonna put in? Purchases return, yes. So purchases return is $24. So same thing, at the end of the month, we're gonna post a purchases return for $24. Do we do that? We don't, right? This is the purchases account. So we're not gonna park that information in because it's not related to purchases, right? So you gotta be very careful. Don't just go parking in all the figures you see, right? You have to be very careful. You have to understand we are working with the purchases account. So we're not going to park the purchases return in here. I'm sorry if you actually followed me and done that. Should have given you a heads up. Yeah, but we don't do that because that is purchases return. It's nothing related to purchases. Right, so what other information do we have here? Anything else on purchases? How about the payments? The payments that you make to your supplier, do you put it in the purchases account? No, we don't, right? We don't do that. Do you put information about sales? No, right? But there is one more piece of information I can put in, and that is the cash purchases. Because cash purchases, they are purchases. So this is on the 20th for $73. So I'm going to park it here. And we're going to put this as cash, right? Because we purchased this on cash for $73. Oh, bank transfer, I'm sorry. Should have read the whole thing through. So this is paid via bank transfer. So I'm going to park in the bank account, $73. Right, any other information that we have? No, I believe that's all. So we can finally work on our closing balance. So the closing balance is pretty obvious. It's going to be on the credit side. So let's total everything up. 6,327, 1,009, and $73. That brings you to $7,409. So this is going to be the figure that you're going to carry down into the month of February. So remember always to do your balance brought down. If there is a carry down, do a balance brought down, right? So that you don't lose your marks. So if you did not include the opening balance, right, you would have lost a mark there. But overall, it's not a very big effect if you're looking at a bigger picture. So that's how you prepare the purchases account. So just a little bit of a trick here, but everything else is quite doable. Nothing is too difficult. And with that, I'm going to enter into the next question. So the next question, they ask us to prepare RIA's Purchases Ledger Control account for January 2025. Balance the account and bring down the balance on 1st of February. So the Purchases Ledger Control, what do we know about this? When you talk about the control account simply refers to a totals account. And what totals are we referring to here? We are referring to the totals of the payables, since we are looking at purchases. Right, so very simple. We understand that purchases ledger, or simply the payables, they are a liability. All right, they are a liability. So liability is recorded on the credit side. So if it reduces, it appears on the debit. Right, so first of all, I'm going to park in my opening balance. That's what I'll do every single time. So 2025, January 1st, we're going to have a balance brought down here. So where am I going to get my opening balance? I'm going to scroll back up. Where's the opening payables? Is it here? No, right? So I'm going to go back up. This is the figure that I need. 1,510. That is the opening figure for my trade payables. So that's the amount that we owe them at the start of the year. 1,510. Now, next up, I'm going to be looking into items that will increase my payables. So for this case, we have a simple one, which is the purchases. So what figure am I going to put in for purchases? Am I going to bring in $1,009, right? Am I going to do that? Or am I going to bring in 1,009 plus 73, right? What figure do I take? Do I include the cash purchases? No, I don't, because this is the payables. Payables are on credit, right? Buy now, pay later. So I'll only take in $1,009, right? You don't take the closing balance for the purchases account because that is accumulated. Right, is there anything else that will increase my payables control? Well, nothing else here, right? There's nothing else. There's no late interest charge. So that is the only figure that we have for purchases. Right, then we move on to the debit side. What is going to reduce my payables? So the first item that I can think of from the top of my head is the purchases return that we've done earlier. Right, so purchases return of $24. That's going to reduce your payables. Now I'm going to go back up and look for the next piece of information. What else is going to reduce my payables? Bank payments, right? So let's use a different color here. So bank payments, I have $300. I paid Nakir, right? The amount due on 1st January, which is $600. After deducting a 3% cash discount, right? We're going to have to work this out. So your 3% cash discount is $18. So 600 minus 18 will leave you with $582. Now, any other payments that we've made? Nothing else, right? So once again, don't take in the cash purchases because they are not related to the payables. So our bank payments, we have a total of 300 plus 582. So that's going to be $882. So that is the payments to my suppliers plus a discount allowed. Remember the discount that we've gotten from Nasir? Supposed to be a discount received, right? Discount that we've gotten from him, the $18. That would also reduce our payables. Right, so do we have anything else? Right, is there anything else? Any contra entries here? No. Alright, so I think we've done everything. Right, what we could put in, we've already put it. Well, there's no put it word, but yeah, we've already put everything in. So let's get our closing balance. Right, so I'm gonna leave just gonna leave a space here for the closing balance because obviously a liability, so it's gonna be on the credit side. That's why your closing balance is on the debit. So let's total everything up. We have 1,510 and 1,009. So that's 2,519, obviously the larger figure here. And we're going to deduct $24, $882, and $18 to give us our closing balance of $1,595. So that is our payables account sorted out. Now, I hope all of you are following all right through these, through all these ledgers and numbers and journals, because we're going to be moving on to a theoretical question. Now, I believe I have two fan bases. I have people who love theory, they love explaining the logic behind things, and I have my second group of people who don't really like theory so much. They find it difficult to express what they're trying to say, right? But I'm going to make this very easy for you, and yeah, hopefully you get something out of this. Now, I myself, I like theory, right? No hate, no hate. I like theory, right? I like theory because I love to express my thoughts. I love coming up with ideas, you know. I'm a very philosophical person. Yeah, I know, it doesn't seem like it, but I love coming up with new ideas. I love listening to other people's ideas. So this is what I'm gonna do, right, for theory. Now, Ria is considering increasing her trade payables payment period to provide her with sufficient cash for an advertising campaign. Right? What does it mean? It means you're going to delay the supplier's payment, right? Increase the payment period. You're going to delay your supplier's payment in order to have the cash to carry out advertising to promote her products. Now, the requirement here is simple. Advise Ria whether or not she should increase her trade payables payment period to provide her with sufficient cash for an advertising campaign. Justify your answer by providing two advantages and two disadvantages of your advice. So what I'll do here is I'm going to consider the effects, right? Consider the effects. I'm going to use my logic and my common sense to work here because I believe that a part of accounting comes from logic, right? So we're not going to blindly memorize answers, you know, because when you memorize answers and you get nervous, you can't spit out anything. So I want you to train your mind to think in a logical way, how a logical person would react to this. Now, I understand most of you are students, you probably don't have your own business, you wouldn't understand how it works, but I want you to think in a very logical manner as if you were a businessman, right? What is the effect of increasing or delaying your supplier's payment so that you have money to run advertising? So I'm going to talk about the advantages first. Now, I'm going to do this in a point form because I don't want everything to look too messy. You can write a complete sentence, but I'm just going to put it in bullet points so that things don't look too messy when I'm writing on my computer. Now, what do you think is the first advantage? So think about it this way. You want to advertise your product, right? And you need the cash, but you don't have it. So you're thinking of delaying your supplier's payment. I pay my suppliers later and I use that cash to settle off my advertising first, right? What is the advantage that will come out of this? So for my first point, I'm going to tell the examiner that trade credit is available free of charge, right? I don't have to pay anything to use the trade credit because normally when I purchase on credit, I have a credit period. So let's say 30 days or 60 days, right? So I have up to 60 days to pay my supplier. If I have the money, I don't have to pay them now. I could probably invest the money somewhere else. So that's where I put out this point. Trade credit is available free of charge. I don't need to apply for anything at all. Number two, no interest payments to the bank, right? Compared to if I borrow a loan, I would have to pay interest, or if I go for an overdraft, I would have to pay interest. But here, I don't need to pay any interest to the bank, which ultimately reduces my interest costs and increases my profit. So I'm going to give you a few more points, just food for thought. The next advantage, if you ask me, I would tell you that monies received from incremental sales could be used to pay off suppliers, right? So if I spend money on advertising, I'm going to have more income, right? Sales will be coming my way. So I can use that to pay off my suppliers later on. And for the last point, I'm going to mention that RIA, right? RIA is a new business. Yes, where does it say that? So that's where you have to analyze a bit into the question. So RIA started trading on 1st of August and it's only January 2025. That means she's been in business for not even half a year. So I'm going to tell the examiner that RIA is a new business, hence advertising is necessary, right? Which is true because when you start off new, nobody knows who you are. You want to start gaining some reputation in this industry. So these are my advantages which I can elaborate on. I hope you're able to think of some others as well. If you have any other answers, feel free to share them down in the comments below and I'll tell you if you're right. Now, for the next point, we're going to talk about the disadvantages of delaying your supplier's payment to pay off your advertising. So what happens if I delay payments to my suppliers? Think of logic here, right? What happens if I owe you money and I keep dragging your payments? Will you be happy? No, definitely you won't, right? So the disadvantage of doing this is that you're going to damage the good relationships with suppliers. They're not gonna be happy, you know. It's like that one friend you have who owes you money, and even though you see them eating good food, buying things, but they don't pay you back, yeah, that's the kind of person. So it damages the relationship. Now, next up, the suppliers may refuse to sell to RIA on credit. So next time you want to buy anything from me, I want to see the money first, right? I'm not going to give you any more credit terms. So if you delay payments, what else is going to happen? So RIA is going to lose out, right? She's going to lose out on cash discounts because she's not paying early. She's going to delay the payments. So she'll miss out on OD's 5% there. Now, finally, I can tell them, right? I can tell the examiner that Advertising may not necessarily increase sales, right? If I spend money on advertising, it doesn't mean that it's gonna be successful. I mean, a lot of people do advertising and it fails because, either you go through a wrong medium or you reach, the wrong target market. Well, anyway, that's a business topic, but generally, this is what I can say, right? Advertising may not necessarily increase sales, may not necessarily be successful. So there you have it. You should get your 5 marks provided that you give them a recommendation, right? Whether or not they should increase the payables payment period. So with that, we conclude question 1, right? Which is a relatively easy question, to be honest, because we're looking at ledgers, we're looking at journals, very straightforward items, very straightforward, nothing too complicated other than the balance on the purchases account. Everything else is quite doable. Alright, so I'm gonna end this video here and I'll see you in the next video where I'm gonna do question 2. Right, we're gonna move on to the financial statements. So I'll see you all there. If you've enjoyed this video, make sure to like, share, subscribe. Yeah, I think that's what most people would say. So yeah, like, share, subscribe, and comment down if you have any questions, and I'll see you in the next video.